Welcome to Seeking Alpha's CEO interviews, informed conversations with the best and brightest CEOs in the publicly traded markets. Quality of leadership is a decisive factor in stock performance. Our show provides intimate and in-depth investing discussions with industry leaders across all sectors of the marketplace. We publish excerpts on social media platforms and the full conversations on seekingalpha.com or on our highly rated Seeking Alpha mobile app under CEO interviews.
Welcome to Seeking Alpha CEO interviews. Today, my guest is Chieh Huang, Chief Executive of Box. Box today is just reporting their second earnings as a public company after de-SPACing. Chieh, tell us how you guys did.
Yeah, so we're really proud about the results, Josh. So, obviously, thanks for having us on the show again. But overall, what you're going to find is that we delivered results in line with what we forecasted back before we de-SPACed in October of 2021. So, as a public company and as a public company management team, it's all about execution and delivering what you said you were going to do. And so I hope everyone out there finds that that is exactly kind of what we're reporting today. More specifically, there's a bunch of highlights to call out. So our software and services business generated more than $20 million for the full year 2021. So as a result, you can imagine that has an outsized impact on gross margin. So gross margin for Q4 was up over 50%, 50%. And then also on the retail business, AOVs continued its upward trend, growing over 10% now to about $113 or $131 was the actual number. So a lot of things moving in the right direction.
It seems like we're at the tail end of the pandemic, maybe an endemic now. And I know that was sort of a headwind back last year a little bit because of businesses. Are you seeing in the quarter? Did you see movement as far as B2B? And what about for the year?
So that is an excellent question and one that we're getting a lot of, frankly, question and debate over. So if you remember back in the day, we reported out that from 2015 to 2019, our B2B business grew at over a 50% CAGR. Then, of course, COVID happened. No one worked in the office. And so we've had 2 long years of remote or hybrid work. So when does that come back? Is it ever going to come back? It's important for us here at Box because that B2B business was about a quarter of our entire business pre-COVID. They were the stickiest customers, the highest margin customers, highest AOVs. And so we really like that customer set. But overall, of course, COVID really kind of knocked that business on its heels. So what we're hopeful to see is that though the full year B2B was not where we wanted it to be, Q4 B2B in our latest quarter that we're reporting, it was up over 50%, so up over 50%. So we're starting to see those green shoots of recovery. We're starting to see reactivation of customers that lapsed over the last 2 years. And I think most importantly for those that are listening out there, the latest trends we're seeing on their behavior is that they're behaving similarly to pre-COVID. So no one knew if they were going to come back and spend less or they weren't going to spend as often. But the folks that have come back, they've begun to spend just like they did before COVID.
Your business where you're selling, I guess, sort of like your software to customers. How is that going? You had some big, wins last year, or customer announcements. Should we expect more this year?
Yeah, so we're really bullish on that business. So you'll see that as of our Q4 or Q3 print last year, we told everyone that we had generated already $15 million in our first 3 quarters as a business selling software. Once you add on Q4, we're now reporting our full year results. It's over $20 million. So I think that's why you saw such a big increase in gross margin, especially in Q4, where we were up over 50% in terms of gross margin. So 2022, that path and that focus will continue. We've got, of course, more regions that we're negotiating and discussing with Ian on, which was our first and biggest lighthouse account. But we've also diversified and have other folks in the pipeline as well. So we've got high hopes for software and services in 2022. So we're definitely seeing inflation in our business. I think just like most folks, well, unlike most folks out there, some of the supply chain issues of bringing things into the country didn't really affect us because almost everything we sell is made here in the US, or a significant amount of it is made here in the US. But when it comes to inflation, there's nowhere really to hide, right? It's hitting sectors all across our industry, all across our economy. So we're certainly seeing prices from manufacturers rise. At the same time, though, up until this point, we're also seeing a very resilient consumer. So we hope that we'll see that trend continue. And in fact, we hope most folks will think, okay, if prices are increasing, I want to save some money. What's an easy way to do so? Maybe to buy in bulk. So hopefully we'll see the tailwinds of that in the coming months. Yeah, so Max Delivery closed the day we went public. So our legal and finance team was really happy that I wanted them to do that along with the same day we're going public. But luckily we executed and we got it done. So integration is happening as we speak. So that deal just closed December or first or second week of December. I believe December 8th was the exact number. And kind of integration is already happening. So as of today, you can already buy our private brand on Max Delivery service. And now we're looking at expanding that business geographically. And so we think there's going to be a lot of interesting things coming out of Max Delivery this year. Oh, I think it's two things. I think definitely we got our eye on B2B. I know we talked about it. It's a good question from you. So that's something that we're hopeful for. We're definitely feeling it here in New York City. Like a lot of folks are beginning to return to the office, albeit even 1 or 2 days a week. So that will be a key driver of 2022 potentially. And then also the software and services business. Again, super high margin. The margin is way better selling software than, of course, selling actual hard goods. So we've got our eye on that as well. So those two drivers, I mean, if those two are firing on all cylinders, I think we're going to have a great year ahead. So we've got a lot of eyes and a lot of questions from analysts on those two parts of the business.